Hello, this is Todd Foster, and this is your market wrap for the weekend. It's September 21st, 2018. Well, part of a healthy bull market is rotation. What that basically means is leading sectors that have done well. We like to see money rotate out of that while the broad market stays pretty steady. And what's going on is underneath the surface, we're seeing money move into different areas. And I wanted to kind of show you what's been going on for the last couple of weeks. And you see here, this is the NASDAQ, this is the NDX 100, it's the QQQ. We do own that for a lot of the models. This is your FANG stocks, your Facebook, Alphabet, Netflix, Google, those kind of companies. And you can see here what's been going on with the NDX for the last month. You see this here? Okay. So as this was happening, the S&P has been doing this. Okay, see it's been going different. It's acting different. So I think this again gives us more evidence that we're at the tail end of this bull market. We're seeing smart money sell leading stocks like Amazon, the tech stocks, to move into laggard sectors like the financials, the banks. And you can see the banks finally had a nice breakout this week. You see the volume down here. And we've been waiting for the financials. The financials make up about 25% of the S&P. So as tech kind of slows down, it doesn't mean tech's going to go down. It just means it doesn't need to outperform anymore. But we need other sectors to kind of pick up that slack. Well, we see here financials, one of the sectors that usually rallies towards the end of a cycle because of interest rates kind of moving up. And I'll show you interest rates in a little bit, which did break out. But now we're finally seeing the banks in this pretty nice base, and it looks like it's going to start to run up the right side of the base and break out here in the months ahead. So that's a very good sign. So I think some money rotated into the banks here. We also have the industrial stocks, which is another kind of sector, and you can see they've been on fire now at the high. So we're going to probably get a little pullback next week, but I think we're going to continue up from there. But anyway, this might need a little pullback. But you can see here also, this was stuck, broke out. Look at this compared to the NASDAQ, right? So there's been under the surface, that's why the S&P or the Dow really haven't gone down too much or been moving up, because we're seeing that money kind of come out of the tech, but then move into these other areas. So we have the industrials doing well, and then the materials look like sort of like the financials, how they started to make that pop out of here, okay? So that's what's been going on, and it's healthy and it's great because we don't give much back in the market and we continue higher now. Now, once tech rights itself, okay, once tech starts to take off again, we know that Amazon and all those stocks make up a big portion of the Dow and the S&P. We're going to have everything kind of moving up together, okay? Also, in the last 2 weeks, we've had the marijuana stocks start to take off. This is the MJ ETF. It went from 25 to 45 in a matter of 2 or 3 weeks here. This is another sign I've been waiting for. The marijuana stocks is kind of a sector where retail investors are playing around a lot. I don't think many major institutions are buying into these stocks yet because they're unproven and a little risky. So this is showing that risk appetite is starting to creep back into the market, another necessary ingredient we need for topping in the market in a bear market, okay? And I'll get into a couple of the scenarios that I listed on there when we look at the market. But I wanted to show you that the weed stocks or marijuana stocks are starting to really move up here, and it could be a sign of risk-taking by retail or smaller investors. And again, a very necessary ingredient to end a bull market. We want everyone in the market for the market to top, because if everyone is in the market, who's left to buy? No one. Smart money sells and we start the decline, okay? As we've been saying for months now, our next big job for you guys is to navigate the bear market. We've had these wave counts here, and actually I think I'm going to have to put the red 4 over here, and we're moving up in this red 5. But it's been a hell of a long run, longest in history. Valuations are starting to get a little stretched. We have a Fed that keeps raising rates. We need that sentiment to start to increase as well. So we want to be really watching now very closely for when this market's going to top. Now, We've had a target of 3,000 for a very long time. I don't know, I haven't updated this chart, but let's see. I think you remember this C at 3,000. Well, we're at 29.31 and it looks like we're heading up, okay? So two scenarios I see here. Clean that up. Two scenarios I see here are either one, this just keeps going up, okay? And it starts to accelerate, and I want to show you what that might look like. See here in January, this was at the beginning of the year, 2018. See January, you see this sprint we had? This is about a 6% move. If that starts to happen again in the weeks ahead here, we're likely going to end this bull market a little sooner than people think. Possibly even the top could be this fall, okay? And if we do get something like that where we start running up here very dramatically, we're going to be looking to sell an equity position or two into that strength. Now, what would be better for the market and prolong the longevity of the bull market so that we can push into next year and up to about 3,200 on the S&P, which is about another 8-9% from here or something like that. We want to see this kind of pull back. We'd like to see a pullback maybe even as low as this rising 65-day. Kind of come in next week a little bit down in here. That would be good. Reset, the MACD would come down and kind of reset. If we get more of that type of action where we're correcting and then stair-stepping our way higher, we could prolong this bull market. But again, the excitement I'm seeing in those marijuana stocks, and I'll show you Bitcoin, which some of these altcoins started to move. Bitcoin did move off the bottom a little bit, but if we get Bitcoin to move up too, we have the materials that lagged, we have the financials that lagged, we have the industrials that lagged, all going up together very quickly. It could be the end of the bull market sooner rather than later. So the next few weeks are going to be exciting here to see what type of market we have. We have plans for both. We've already started to make some subtle shifts throughout this year, and we're prepared for either scenario. But enjoy the ride. Accounts are doing well once again this year, so we're very happy with the performance. But again, now every time as we move higher here, risk is going to get higher and higher and higher, not lower, higher. Okay, so we want to really be on top of that. Now, interest rates have broken out, which means bonds have gone down. This is the 10-year note yield. This is what's tied to mortgages, the 10-year note yield. This looks like you can see these waves clear, and I told you about the 5 waves. So we have wave 1, 2, 3, 4, 5. That was the top of 3. Usually these wave 4s that I have are triangles, and this looks perfect, A, B, C, D, E, or the 4. And then we're breaking out of the triangle. And what do I always say when we get up to previous resistance? We pull back a little, and you can see those 2 red bars there. So I have a 2 here. So maybe if the market pulls back, yields would pull back, right? A little money flows back into bonds. But if this goes and breaks out above 3.1%, it means, that risk-on trade. It means the S&P is probably going to continue up into that 3,000, through that 3,000 area. And we'll have to see. This is wave 4, meaning we're in wave 5. So if we do 1, 2, 3, 4, 5, that could be complete interest rate move on the upside, just in time for stocks to roll over, because bonds are usually a benefactor in a bear market. People go to bonds for protection and for income in a bear market. So we could see this 1, 2, 3, 4, 5 coincide with the S&P moving up through that 3,000 zone, and then kind of everything topping out together. John here has done a lot of work. John is a CFA, Chartered Financial Analyst. He was predicting that maybe sometime this third quarter, when we get these third quarter earnings reports into the fourth quarter, that we might be topping on earnings. Ultimately, the market moves on interest rates and earnings, or earnings and interest rates. And if we do start to see companies start talking about how they're a little unsure of next year, or fourth quarter earnings, or first quarter next year, we could be peaking in earnings, okay? And again, the ultimate proof will be the action in the market once we start to see the smart money saying that's enough, valuations are too high, and they start getting out of the market. So yields here are even in a terminal kind of position, though they may burst out of here and move up. That means our bond positions will go down. We're not too concerned about that because we feel we're so close to the end of the bull market. You know, within this next 12 months, even if we run the 3,200 next year, it's not really a huge percentage move, really, when you look at how far the market has gone. Like I said, it's about 8-9%. And most of you people are invested not 100% in stocks, so we're not going to get all of that. So again, we want to try to protect you guys of the massive gains we've seen over these last 10 years. So we'll be watching things very closely. But interest rates look like they're keying in here. Now we have a Fed meeting also next week, so maybe they say something a little dovish, pulls rates in a little bit. And then people start to get inflation worries and the stock market explodes. I think the S&P might, like I showed you, pull back a little bit next week, but then continue higher. So we'll have to see what this looks like at the end of next week after the Fed decision, and we'll see what the S&P is up to as well. We're even getting, the international markets are even starting to move up. Let's just look at that. This is that EFA. You can see the EFA hit support here. It's trying to rally, so we may even get up here. Now, this is one thing I want to show you. You can clearly see how international is lagging. Look at emerging markets. That's why we don't believe in those target date funds. Look at emerging markets if you were in this. And see how it's trying to, what are these red and green line? My 65-day moving averages. Isn't that awesome how it holds in right there? But if emerging markets even was to break out and kind of move forward, then again, we get everything moving up. Now, what's interesting is from these laggard sectors, if this was kind of wave one of their bear markets, like they're ahead of us, they're going to see a big retracement for wave two that can kind of come all the way up here. Well, you remember I showed you that NYSE, which I said is the broadest, the broadest measure of U.S. stocks, and I was concerned how when it was stalling in here. Well, we're finally getting to see that little breakout move. It's starting to push up when it tanked from earlier this year. You see this big gap right here in the chart right here? So wouldn't it be interesting if we continue to run up and we top out somewhere here, and this coincides with around that 3,000, 3,050 on the S&P. So that would make a lot of sense to us that the broad market kind of gets up to here and double tops to end the bull market. Okay, so again, in the short run, we still think we have more to go. But again, if we start running up very dramatically, we're going to be very concerned, and we're going to have to take some action, take some money off the table to protect in case this thing is going to turn down and start the next bear market. So I want to show you this NYSE, and again, this is the stock market right here. And there's that big gap up here, and this double top, if it came all the way back up to here, would make a lot of sense to us. Let's see. Talked about the emerging markets. Let's look at gold. Well, gold is still holding that 1,200 level. Still looks okay here. We're down a little bit in this gold. We want to hold it. We think, again, it will be good for a bear market situation. But again, it's holding here. And I'll show you a little bright spot. Remember, I like to see that the stocks lead the commodity. So this is the actual commodity of gold. And there might be one more little dip here to kind of test this one more time. This does look a little like it needs one more little move down before it goes up. But I did want to show the gold stocks. And a little life has been moving into them off this bottom here. Okay, look at the gold stocks really fell off a cliff here, and we're starting to get a little rally up. Now I don't know if this too needs one more low to kind of come down, but it does look like at least a start. At least it said enough's enough over here, made a stand, and we're starting to see a little bit of a rally. So this is a little bright spot in gold that we're seeing the gold stocks kind of lead the metal a little bit. So that's good. Now the U.S. dollar, if the U.S. dollar starts to go down, this is the UUP, the dollar. See, the dollar's been very strong. 1, 2, 3, 4, 5, ABC. We'll have to see what happens here with the dollar. Again, it's below my 65-day moving averages, so it's susceptible to drop to here. The Fed meeting is going to have the Fed is going to change interest. The interest rates market's going to move, and the dollar market's going to move, and then equities. but we're going to see what the dollar does and what the Fed decides to do. If they get a little dovish and say, okay, we're doing one more in September, kind of holding off a little bit, the dollar might, fall here. And we also, of course, have that trade war thing going on, and we'll see if any news happens there and whether that affects the dollar. Now, if the dollar drops, what will it help? International, which I said is oversold and it needs to kind of come up. It will help materials. I just showed you that they're starting to break out, and it will help gold and the precious metals. So a lot we'll see next week after the Fed decision. They're widely expected to raise rates another 0.25%. Let's see what it does to the dollar. We'll see what it does to interest rates. We'll see what it does to equities next Friday. So that's good. Now, another thing, we're hearing about this trade war, and I'm getting definitely some questions from clients, and you're just hearing out there the way the news is written that this is so bad and so negative. And who's winning? Well, we're winning. It's clear that the United States is winning the trade war because I just showed you what China looks like. This is China, year to date, 25% is down. How are they winning? They're nowhere. They're not winning. So we're winning the trade war for sure. Now, looks like there's some positive divergences here. So maybe China's going to start at the bottom, like I said, have a low trace. Maybe that means there's a resolution on this trade war thing with China. I think they're coming over here to speak to us. Maybe there's a positive resolution next week, and that gives us that. If something works out between us and China, the markets are going to. China's going to explode up and start to retrace up to here, and we're going to see the U.S. market possibly have that blow-off move. But if you want to know who's winning the trade war, don't take my word for it. Take the market's word for it. The market is the smartest, and this is all very smart people putting all of their, putting their money where their mouth is. And you see China down 25%, and you see the S&P doing the complete opposite of that. So anyone tells you we're losing the trade war, it's not true, okay? And this is another reason why to know. Now, of course, this could escalate, okay, and turn into something bad. But that's why you always want to, you got to use charts, because you would think, right? If you just were in a room or someone asked you a question, hey, we're going to have a trade war with China. What do you think stocks are going to do? Mostly everybody's going to say they're going to go down. But they didn't. They went up, okay? So when you have these news situations, these circumstances, these different things out there, don't assume. You need to watch what's actually happening in the market, and charts allow us to do that, because I'm showing you, folks, this is it. This is what the S&P has done, for the last 18 months right here in front of you. There's no opinion whatsoever in what I'm showing you. This is the facts, okay? So, and I like to judge everything off of that. Hey, was the trade war bad for the dollar? No, because the dollar has been going up, okay? And this is where money is. And then money's saying no, it's been strong for the US dollar. Okay, so that's why we always like to use charts, and to not take people's opinions and not use the preconceived notions of what we think may happen on an event. It's very, very important. I think that's all I have this week. Let's just go look at a short-term chart of the market. This is a 10-minute chart. Yeah, I have this little wave too. You see how we had this beautiful cup and handle? I love these patterns. You can just see them happen over and over and over again. So you see it? It's a cup and a handle, and then we broke out. And then what do I always teach you guys happens next? We come back and we test the breakout before we take off, right? So maybe we see a little pullback here of another, what is this? I don't know, 200 Dow points, something silly like that, early in the week until the Fed. And I think somewhere on the Fed, it looks like we're going to take off again. So I don't know what they're going to say. Maybe they are going to lighten up on their interest rate hike situation. But anyway, so again, as we get into next week, let's look for a little bit more pullback in the S&P. I think it's going to hold above here, and it's going to start to rally again. Now, of course, if we break down here and we start getting sell signals, we may take one position off anyway, because again, the risk is getting very, very high now in the stock market. So again, just know where our heads are at. We're here to protect you. This is where, this is the value we provide to you. When stocks are going up, stocks are going up. But we want to protect you guys after all these gains for younger folks, and for my people in retirement or close to retirement. Very big. We can't take hits, big hits, because no money's going into those accounts anymore. Or people that are getting close to retirement can't have those big negative years right when they retire, after they retire. So people that have been with us a long time know we do a fairly good job during these periods when they come. We've made some tweaks. We always go back to when we made mistakes. In '09, we made a mistake by not getting in quick enough. So we think we've corrected that, and we're looking forward to this. One good thing about bear markets is it cleans the decks. It clears the decks, right? Washes everybody out. It kind of takes all the froth off the market, and it sets the stage for another big advance. And our long-term outlook is that we are going to go up again after this next bear market. So we're not concerned this is going to be some kind of generational or 10-year bear market. We think this is going to be more like a normal garden variety bear market. Around 30% is the average, and it's about a year long. So that's what we're kind of expecting. And then after that, another big advance, 100+% gain we're looking for after that. Stinks. We lose a little bit of money in the bear market, but what we want to do is try to protect ourselves as best we can, and then have some powder dry to hopefully buy back lower, protect the account, and then get ready for the next advance. So that's what we'll be looking to do. Just wanted to show you Bitcoin. I gotta make this a little smaller. Sorry, I wasn't prepared. Sorry, guys. You're gonna lose it in my screenshot here. Okay. I guess you guys can all see it now. So this is the, let me shrink this down. So this is the, sorry, I have a technical difficulty. This is Bitcoin. This is the run to 20,000, okay? And you can see what it's been doing here. It's been forming, we call this a base, okay? It's like it's forming that cup, the bottom of the cup. And it's very nice what it's been doing. You can see it's been bouncing along this 6,000, 6,000 for all, right here, 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 here. And what happened this week was a little pop. I'm going to zoom into this little move. We don't know if it's anything big. Let me kind of open this up a little bit. You see how we had a nice little pop from 6,000 up to 6,700. 6,700 is about an 800-point pop. I like that the MACD's crossing here, but we really need to get over this right here, 7,500, let's say. If we get over 7,500, then we're going to come to here, and I think we're actually going to break out. So we need to see what Bitcoin's going to do over the next week, over the weekend into next week. If we get over this 7,500, I think the bottom could be in. And again, when you look at it, we had a big run forming that bottom of the cup, and now we're going to start to come up the right side of the cup and start to come up here. Now, another thing, we talked about risk on in the market and how bull markets end when everything's kind of moving up together. Bitcoin was huge last year, right? So wouldn't it make sense for Bitcoin even to have a big rally? I don't know if it's going to go all the way back here to 20,000. It might need to come up hard up here and then still tank with the stocks in a bear market, because most things go down in a bear market. But there could be a big kind of exciting move here in the cryptocurrencies if we start to get that blow-off move where everything's moving up in the market. Marijuana stocks, all the laggards, everything, tech even starts to move again, and we get Bitcoin to move up again, okay? So Bitcoin needs over 7,500, a promising start, and the reason I say that is because some of the alternative currencies, now you guys can see how much these move. I did own a little bit of this week. This is a 60-minute chart. Down here, this is at 27 cents on this one called Ripple, okay? Down here, 27 cents. In a matter of 3 days, it hit 80 cents. So it went from, that's like a $30 stock going to $80 in a matter of 3 days. Okay, now it's coming down a little bit. But this is pretty good because if, just like I talk about the small cap mining stocks, gold stocks, small cap stocks in general, when those are moving up, it's risk on. And it usually means that the larger cap are going to kind of follow behind that. They're leading. So seeing this Ripple one, which is definitely risky, kind of have this explosive move where it doubled. It went up over 100% in a matter of 3 days. It might be meaning that Bitcoin is going to get over that 7,400. Now, I don't want to get too ahead of ourselves, but Ripple was the real big one, and I want to show you how fast these things can move. Again, it went from 30 cents to 80 cents in a matter of 2 days. So we'll be keying off these and watching these as we get into next week. But for the meantime, the big story, again, will be this the stock market and making sure we protect you guys as we move forward. So that's all I really have this week. Sorry it was a little longer. I was out last week at doing another seminar, and but I'll be here moving forward. So thank you for your patience on that, and enjoy your weekend, and we'll speak to you again next week. Take care. Bye-bye.